Welcome back to Switzer. Now, the King of Charts returns after an international excursion to who knows where, but the important thing is he's here and he has his charts, and so we should soon find out where our stocks and other investments will be heading. For more, I'm joined by Lance Lowe from Accountants Invest. Hi, Lance.
Hello, Peter.
Now, you know, we're always short of time, so I'm not going to muck around.
All right.
Last time you were on the show, let's have a revisit what you said.
Okay. Now, where we are, we're only 1.6% above the B line.
But do you think they're building up a bit of stability there, Lance, or is still a bit of a threat?
Yes, look, I think it is building up some stability. This is in Shanghai, of course.
Okay.
And I think just like with gold, it's got a little bit more upside to see where the L is.
Yeah.
That L is about 4% up. But I showed these two charts because gold shows a stabilizing situation.
Yeah.
Shanghai is also showing a stabilizing situation, but there's a little bit of concern here.
Okay, that was it, Lance. So are you happy what you said then?
I'm very happy with what I said, Peter.
Yeah, well, tell us why. Some people wouldn't understand what was so astute about those observations. So, in a nutshell.
Well, last time I was on the show, the Shanghai index, along with the gold price, were really showing signs that it really needed to stabilise and go up in order for the global markets to also stabilise and go up.
Yeah.
And I pegged at the time that the level was just above the B for the Shanghai Stock Exchange.
Yeah.
It needed to go up to a L level, which was about 4% higher. And we achieved that on the 12th of August, and it stabilised, and today we had some wonderful news, and it shot up even further.
Yeah, and this is a reflection that the China story going forward looks a lot better than 6 months ago.
Much better.
Okay, mate, let's go to your first chart now.
Okay.
Okay, so as we're waiting for it, just tell us what it's going to be.
It's the Shanghai chart.
Again.
There we go.
Yeah.
So
You're well above the L now, aren't we?
We're well above the L. As you can see, it went through the L, it came down to just below the L, and it took off again, and you can see we've got an S.
A very steep incline.
A very steep, which is actually today's price action, Peter.
Yeah.
And it's actually gone through the 200-day moving average. And I think it'll be range bound now, pushing G1. Now, G1 is a good level, okay?
How many percentage higher do you reckon that is?
That is about 5% higher from where we are now.
Good, yeah.
But the S level is something it could possibly retreat back to.
So it's a support as well.
Which is a support. So basically it could come through the 200-day moving average, take off again, but I think it's got a nice upside bias now.
And also, we get retail and production figures this week. If they're better than expected, we'll go even higher.
Great.
Okay. All right, mate, next one. So the next chart is what, Lance?
The next chart is the gold chart.
Okay.
And if we can wait for that to come up, what that will show, there we go. What that will show is that in July, I also mentioned that it'll go to the L.
Yeah.
Now, the timing of this was perfectly timed for this show, Peter.
That's why you're on the show, Lance.
So at that time, where it says July, it was 1,328.
Yeah.
And what you can see there in July is it went down a little bit. I said it'd go to the L, or it needed to go to the L to stabilise.
Yeah.
L was 1,418. It actually got there by the 27th of August, peaked through there by the next day and came back off, and now it's at 1,388 there. I think where it'll go now is to that little T, and the little T is just below the 200-day moving average, and what it is it's called a little test. I think it'll test that level, and if we can take it through that level and break it through the 200-day moving average, I think we can start moving a little bit higher.
All right, that's a serious part of that story, but also when Chinese people feel more confident, are they inclined to buy gold as an investment asset, or they buy it when they're afraid?
I think there's a little bit of both, Peter.
Okay.
You know, as to which side of that coin causes the price to go up, it varies, okay? I think that what you're alluding to is that as things improve in China, there probably will be an increase in demand for gold.
We have seen that correlation, booming in China's economy and gold prices going up, haven't we?
And you know, I think the other thing with QE tapering off and the printing of money tapering off.
Yeah.
I think that has been factored in now. And whilst I don't expect a huge rush to the price of gold back up, what we saw was a stabilisation of the gold price.
Yeah, and some of the exodus out of Asian economies would have gone to gold as well, wouldn't it? Because it's not just a US thing. Let's go to the next chart, which is S&P 500, I presume.
The S&P 500.
Okay, and what are you seeing there?
Well, the S&P 500 is, you can see there where July, I said that it probably wasn't going to go anywhere. It'll probably going to go sideways.
Yeah.
And this is exactly what it's done. It was 1685 in July when I came on last. I said that it'd probably have troubles getting through the 1744, and in essence it pushed up, sort of had a look at 1709 in the ensuing days, on the 2nd of August in fact, and then it came off. So in essence, it went up 1.4%, and now by the time of this show, it's gone down 1.8.
The fact that it's not getting anywhere near the S level, the RS level, is that a good sign, Lance, that it doesn't really want to test lows?
I think it's going sideways. So wherever it sort of goes, if it can go near there, I'm not too concerned. And I think where the markets are showing a nice formation across the charts is that it can probably go sideways a little bit longer, maybe retrace, because look, you've gone up 26.5% in 8 months.
Yeah, which is not bad.
Which is very good. Yeah. And if it can go sideways and have a look at the R&S, right, again, and then in the 2 months later, go and have a look at the 1744, that would be ideal. Yeah,
it seems to me that tapering could actually push us down towards RS, but then that kind of response you get in America as last month's, in December, could easily bring us up to 1744.
Right, and you can see where the 1744, the M there that's on the chart, what that was projected back in the March show here.
Yeah, okay.
And so if this gets, I thought this would be taken out towards the end of the year. We're heading towards the end of the year now. So October, November, December, that'd be nice.
And November, December is good for stocks. Last one, this will be the local market, I presume?
The local market, what the local market shows, again, is an upside bias. Where I came on the July show, I said, look, it's not going to do too much. It's actually gone up about 2.6% since the last time of the show.
Could be a bit of pre-election excitement, but go on, Lance.
And, I think that technically this chart, whilst it shows it's on a nice upward trend, it has actually not led any of the global markets. I've said that in the past, and now is probably a time which exhibits that more than ever before. If I was to look at this chart in isolation, I wouldn't know where it was going to go. But because of the evidence of the preceding 3 charts and other markets that I'm looking at, I'm feeling comfortable for the Australian market.
But if we look at all those the low points on that chart on the way up, they still point very heavily up, don't they?
Well, that 200-day moving average, which is the sweeping yellow line at the bottom there, it was threatened back, a few months ago in July. I think, before July, and I think now it has reasserted itself, and I think if the global markets continue to stabilise like they have been over the last 2 to 3 weeks, I think we're looking good to go take out those highs.
Okay, one last thing, we're running out of time. So is my 5,500 call by the end of the year too outlandish, Lance?
That's a different question, Peter.
Okay, right. We'll save it for the next show, all right? Next show, come back and tell me whether I'm on the money.
I'll have a look at that.
Okay, mate. Thanks for joining us, as always.
Thank you.
That's Lance Lay from Accountancy Invest. That's the show for tonight. I'm Peter Switzer. Thanks for watching.